Good morning. This is Larry Edelson for my Uncommon Wisdom Weekly Market Update for Thursday, March 10th. I hope you're all having a very good week. No doubt the markets are certainly very interesting in here with all the background developments occurring in the Middle East and, of course, the very mixed messages we're getting from the U.S. economy, the U.S. sovereign debt situation, the U.S. municipal debt situation, and Europe's ongoing sovereign debt crisis. Some of the trends that we're seeing are certainly not what most would expect, and that's an interesting observation in itself because the markets have a very sly way of deceiving most investors most of the time. That's how markets separate investors, the majority of investors, from the majority of their wealth. They take no prisoners, and I believe that's something we're going to see in spades this year. Having said that, let's go right to the gold chart. I'm going to pull this chart up here for you. Gold did make a new record high early Monday. However, I maintain my view with the precious metals and most commodities in general that the recent run-ups, not the entire run-ups, but let's say the last 2 or 3 weeks, especially in gold, silver, and oil, are being driven largely by the events in the Middle East. They are not being driven by short-term fundamentals. Yes, the long-term fundamentals for these markets remain decisively bullish. However, in the short term, we are seeing very overbought conditions in gold, silver, and in oil, and in many other commodities as well. Right now, in gold, for example, last week I showed you that the relative strength of this move was declining even as the price of gold moved higher. That is still in place, and that is still a very bearish omen for gold on the short term. In addition, we have a confluence of cyclical resistance up here at 1445 to 1453 level. I would not be surprised to see one more stab higher in gold up to about 1453, maybe intraday even a little bit higher than that. But I do strongly believe that we are very near a short-term crest here, and that the next big move in gold and in other precious metals is to the downside. Interestingly, while gold and silver have made new record highs, we've seen platinum and palladium and copper peel away to the downside. So we have a fractured market there. We have base metals acting as if the U.S. economy and global economy are going to start to roll back over to the downside, which I believe is true. Yet we have gold and silver spiking higher. That is not sustainable. One of those two situations is correct, and for lots of reasons that I've written about recently, I believe that we are far more likely to see a pullback occur in gold and silver than a runaway bull market. Indeed, I don't want a runaway bull market here. If you believe in the long-term strength of gold and even silver right now, the last thing you want to see right now is a continued parabolic move higher or runaway market to the upside. That would mean that gold and silver's bull markets are climaxing a bit too early, and the decline and correction we would see would then last that much longer and go that much deeper. So if you're a long-term bull, what you really want to see right here is a pullback begin to develop. Regardless of the philosophical and view of that nature, technical and cyclical conditions warrant a pullback. I am not going to recommend adding to any precious metals positions until one of two things happens. Gold breaks away to the upside with a solid close above 1453, or it completes a cyclical correction down at the 1225 level. In silver, I just won't touch it until we get a pullback. Now, having said that, let's go right to the silver chart. Silver chart, if you look at it at the surface, it looks like it's come through every bit of resistance on the upside and just can go parabolic to the upside. That is quite possible. I certainly hope that doesn't happen, because then for sure, in my opinion, and based on historical action, the silver market will have basically killed itself for another few years. and I don't want to see that happen. Having said that, I'm seeing additional resistance right up here at the 36 to 37 level that is not shown on this chart. It's system resistance generated by a computer model that I work with. I can't show you the visual aid for that just yet. I am working on developing the visual aid for that. However, suffice it to say, I'm not going to be a buyer of silver in here. I'm going to wait for a pullback to come, whether that starts immediately from where we are or silver spikes a little bit higher to 38 or 39 or even $40. I'm going to wait for the next pullback, and I suggest you do the same. Interestingly, the gold and silver shares, most of the major gold and silver producers, mining shares, have not confirmed these moves up in gold and silver. They are actually trading lower than they were a few weeks ago, and even in some cases lower than a few months ago. Some of them down as much as 23% from their highs last year in December and last August. That is another bearish omen for the precious metals. It's also probably a leading indicator that stocks are soon to roll over, that the economy is starting to double dip, if you will. I think it's something more serious than that with the economy. But let's go to the Dow right now, and then we'll go to the dollar index. Here's the Dow. We had a little over a week ago had that rather sharp down day when we hit resistance here. We have since traded sideways between 12,000 and 12,200 change, 12,300. As you can see, we have a sideways trend channel here with a slight upward slope, with the boundaries being really about 12.1 on the downside and 12.8 on the upside. It is possible the Dow and broad stock markets will still continue to creep a little bit higher. In the most optimistic scenario, spike up to 12.8, 12.9. I don't expect that to happen. I am still leaning towards the broad stock markets rolling over in here for a much needed pullback, which, as I just mentioned in gold and silver, would be much healthier for the broad stock markets if they were to pull back now rather than run away to the upside. There are a lot of technical and cyclical conditions why I believe stocks should be pulling back now, and I maintain my view that no one should be heavily invested in the broad stock markets right now. Let's take a look now at the dollar index. The dollar index, as you can see from this chart, did fall below this important support line that I'm clicking on here for you. However, in the last couple of days, it has recaptured that level, which is significant. We may now see the dollar rally a bit up to the 81 level, which would be consistent with a decline in the precious metals and a pullback in stocks. Now, that would not change the long-term fundamental bearish forces impacting the dollar. As you can see, the dollar has acted miserably throughout this entire time since last December, when the economy's been improving, when the crises in the Middle East began to break out. Dollar typically would have rallied in the past as a safe haven, but none of that happened. And that's a very subtle but important clue to the long-term fundamentals behind the dollar, which are still very, very bearish. Any rally that we see in the dollar short term will of course be explained away with some kind of fundamental logic, but in my opinion it will be nothing but a short covering rally. 95% of the investors and professional traders and hedge funds out there are short the dollar. There's nobody left to buy the dollar, nobody left to sell short the dollar. So someone's going to come along and start covering the shorts, and it's going to provide a pop in the dollar. Having said that, I wouldn't make much out of it. Okay, I will keep you apprised to the next major leg down in the dollar, which will probably not occur until after we get a short-term pop higher in the dollar. Having said that, of course, please stay tuned to my columns in Uncommon Wisdom Daily, and if you're a member of my trading services, to those, and of course my Real Wealth Report. Till next week, this is Larry. Have a good weekend.